Good evening, ladies and gentlemen. Now, if you are not being able to smile and you feel this feeling of angst, why did the share price actually go down so much today again after I bought yesterday or just a week ago? Or if you do a calculation why, how much your portfolio have lost? Now, you are not alone. Now, ladies and gentlemen, in times like this is where we, GCP Global, we have been guiding you for investments in the last 31 years. That's where we come in. We would like to share our own experiences. I, for myself, for the last 31 years, have undergone a lot of crises, from the 87 crash, 89 crash, the global financial crisis, as well as the Asian financial crisis. Now, I hope today, from our tagline that is actually navigating the crisis market, essentially, we will be able to share with you psychological aspect of things you need to adopt to undergo this crisis. The mental makeup, other than the fact that you need to pace your buying, how much to buy at one time. Now, ladies and gentlemen, these are the broad characteristics. Please do not take today's session as a recommendation of the timing or the stock. Essentially, we only do the timing and the stock in detail in our classes. So in this respect and in this background, let's start with the first question. Hi, Joyce. Hi, Yushan. Any first question, ladies and gentlemen? If not, let me just go through the few characteristics of a crisis. Now, if in most crises, it is very clear that a lot of things are uncertain. That is basically what a crisis is. In our FB Live last week, we mentioned that the fact that investors are unable to put a value, to crystallize the value of the damage caused by the coronavirus and its impact on the various economies. At a time when you're seeing a surfeit of news that's impacting the markets, that's basically all the fact that you actually have new countries, you also have existing countries like Italy reporting newer infections, higher infections. Now, on the one hand, that is the fundamental aspect of the coronavirus problem. The financial aspect of the problem is how are investors able and looking to crystallize and value or quantify the damage that is being done. Now, does it mean that the first few packages, that the last one was actually was signed into the bill by the President Trump, regards to the paid and unpaid leave, as well as the 750 billion euro package that came out. Now, at every time, like what happened during the global financial crisis, you have a case where the Federal Reserve, the government officials, the ECB, are trying to do things on the one hand, but of course, subject to Congress approval like in the US. You need time for these packages to come through. Now, investors, when they are worried about the known unknown, in this case, they know it's a coronavirus, but they do not know the unknown impact of how many people will be hit on this, how long will the economy be crippled on this, and basically to quantify the impact, and that's why you have this kind of topsy-turviness. But of course, having said that, you will actually have a case where essentially you have to actually ask yourself, to what extent what the government dish out is sufficient, and that's what the market is actually trying to crystallize. Now, the first question actually came from Mervyn. Now, the question is, when do you think the market will reverse? And cases of confirmed cases drop. Now, I think this is where we said in my media interview the previous week. That is, it will become a crisis when it becomes a pandemic, and the number of cases in the US spread substantially. Now, what is happening now is that New York is the epicenter in the US. So that has to go down. And of course, the fact that the key areas where there has been hit, that number has to go down. If you look at China's cases, the stock market actually bottomed over there 1 week after the number of cases actually taper off. So this is left to be seen whether this is the case for Europe as well as for the US. Jin, is it a good time to start buying into REITs now, as many of the SG REITs have tanked today? Which are the REITs you think will have more upside? Well, for the second question, you have to attend our class, of course, because we go through that and guide you in detail. Now, for the first question, is it a good time to start buying? Now, this is something that you have to answer yourself, because as I said, this session is not to actually tell you what stocks to buy or when to buy, but to give you a good perspective, especially on the psychological makeup and the mental strength that you need to do. Now, you have asked a very good question, but one thing you have to bear in mind is that in a crisis situation like this, when there are known unknowns, now this fall, especially for REITs this time around, is characterized by two gaps. There was actually the previous week when it was doing at 840 on the FTS REIT index, and again this Wednesday at about the 740 level. As of today, as we speak, it closed at 650. Now these two gaps have to be filled first, before you see some stability coming in. And for those students who attended our class last Saturday, we went through the 4 corrections as well as the crisis, and we show you the patterns, essentially that was exhibited in the last few crises. Maybe, to a certain extent, this crisis will play out this similarity. Next question. Dr. Goh from Malaysia is asking, number 1, do you think how further the FTSE REIT index will drop in the next few days? I think nobody can tell, essentially, the next few days or even tomorrow. But let me just give you a perspective. Okay, since the S-REIT market started in 2002, the worst crisis that we actually had faced in terms of the severity of decline was during the global financial crisis in 2008 and 2009. So in that respect, the FTSE index fell from 1091 down to 321. That took a period of 13 months. Now, this was the worst ever. That is a 70% drop. In past corrections, as we have pointed out in our classes, in the last 10 years, S-REITs actually have 4 corrections. The average decline is 17%. Now, we go back to today's fall. With today's fall, all the 43 REITs have actually fallen by an average of 35%. Now, this 35% fall essentially is double the 17% average of the past 4 corrections. But this time around, what is so special about this fall is that it happened within a period of 1 month. Now, if you go back, today is 19th of March, all right? So it started on 19th of February when the S-REIT index was at 970. As of today, we have already lost 35%. Now, you have to ask yourself, therefore, whether in this instant, it's going to reach global financial crisis proportions. If it is, then be prepared for a 70%. If it's not, then it may not be that serious. But to put this in perspective with the Asian financial crisis, where stocks actually fell 58%, now that was in 97 and 98, where REITs basically have not come about. Now, that plus the global financial crisis have the worst negative fall ever, other than today's 35% fall. So today's 35% fall qualifies for the third biggest fall that the Singapore market has ever seen, right? But as I've pointed out, this fall happens within this short period of time. That's 1 month. You have never seen this before. And in your various SMS to me, Dr. Goh, you have mentioned the word unprecedented. It's true. It's unprecedented in this respect. Next question. Yeah, it is beer. Beer at this time basically grease your thinking cells, help you to make a better investor. Kelvin asks, many of the REITs are trading NAV. Is it a good time to accumulate? It's the same question that I have actually answered earlier. Let's move on to the next one. let's move on and ask Patrick. Okay, hospitality REITs are attractive now and cheap. On a risk aspect, when various lockdown last for 1 year, what will happen if the REIT's income cannot cover the interest payment? This is going to be a big problem. Okay, I think you did ask the same question last week, but if you look at those hospitality REITs which are not staple, now the staple ones are the ones like particularly your local hospitality REITs, because it comes with a master lease. The master lease, for like Far East Hospitality Trust, guarantees a 70% income. So be careful which hospitality REITs, especially those that are not stable. Okay, of course, the clue given is among the newer REITs. Okay, those are the ones that we have told people to stay out. Mr. Yong, are REITs allowed to do buybacks? Yes. For example, Keppel REIT has been doing buybacks. Secondly, are perpetual securities regarded as liabilities in counting its gearing? Unfortunately, no, because the law currently is that 50% of perpetual securities count as gearing, that is actually loaned, and 50% count as equity. Now, in our GCP Global, when we teach students, we tell them to include all the perpetual securities as loaned, because that will give you a better perspective. And that's why you see this round, the very heavily hit are the ones that are flirting at 40% gearing level, the likes of Catch Logistics and OUE Commercial Trust. Can we apply TA to REITs? Kenneth, yeah. Kenneth, you actually asked when was our next class. Right now, essentially, we haven't determined yet because we are trying and we expect the next class to be far bigger. So we want to ensure that we get the venue to cater to all, because almost every day, every minute, we have a lot of questions coming in through WhatsApp and email. And if you are one of our students, you notice we try to answer as detailed to the extent where you can gauge and have a better feel. But I would expect that when the DOSCOM code is actually lowered from orange, talking about orange, I need my beer, then we should be rolling out the class very fast. So essentially, these are critical times. Critical times basically call for decisive decision. And that's why at GCP Global, we make sure that we deliver and we guide you, especially during your downtime. And we teach you basically not just academic stuff, but things that will help you tie through a key crisis. So TA essentially is not so applicable as what we have mentioned in class, because in the last class last Saturday, I did mention that some writers, they say that when the stocks break through a 200-day moving average, it becomes a crisis. Now, is that actually TA? So that's left to be debated. Let's move to the next question. Dr. Goh asks, which sector is a better bet, retail, industrial, or hospitality? As I said, Dr. Goh, we don't actually recommend over the media, but since you only ask for sectors, you notice that in our class notes, we have mentioned that industrial REITs, the likes of Ascendus REIT, MIT, Keppel DC REIT, and Mapletree Logistics have transformed themselves into data center REITs, or basically REITs with a higher proportion of data center. Now, these sectors were growing before this crisis. It does look that nothing will materially change that much with respect to the growing need for data in the 5G connectivity, IoT, sectors. So essentially, the industrial REITs probably are the ones that will rank much better than hospitality. Now, ladies and gentlemen, actually today's session is talking about the psychological makeup that you should have. Now, a lot of questions are now being asked about what sectors, what stock. I think I tried to lessen to that since I have actually given you further indication. I'm actually more interested in addressing the psychological makeup of a crisis. How you as an investor should adopt the mindset. Maybe I should just refer you to Now, this article was written for the Pulse magazine. I was interviewed way back, you can see right at the bottom, in 2005. I think the Pulse magazine, for those of you all who were only born after the 90s, is actually a magazine by SGX. So in my many interviews on Pulse magazine, as well as many publications by the media, I've talked a lot about being successful as an investor. Now, being successful investor is not just identifying which sector or what stock to buy, but when to buy and when to bet big. So that is a probably more valid kind of framework. Now, it is the same kind of mentality when we teach the proprietary traders of some of the funds, the property management funds, the family offices that actually send their traders to train with us. So I hope you understand where I'm coming from. The next question is actually from Mr. Low. The China virus situation seems to have bottomed up. Will the China REITs bottom up as well? Actually, you have very little Chinese REITs listed in China because the REIT law in China is not being passed yet. Last year, the first Indian REIT came out, that's Embassy REIT IPO. This year, I would expect that Philippines will come up with the REIT. The REIT with the Chinese REITs with assets in China are actually listed in Hong Kong. The likes of, for example, Champion REIT, Siuhui, and the rest. So essentially, but if you look at the Chinese HKSEI index, the way it actually retraced back after the number of cases have hit bottom, in China, that I think is a very good representation of how the market may play out, after this particular coronavirus. Okay, Claire, you attended our class last week. Why the massive drop in Fraser Commercial and Fraser Logistics Trust? You notice that basically they are undergoing this particular merger. You notice in our class we have mentioned to you that United Hampshire, probably chose the worst time in its IPO. Now, in the same case for Fraser Commercial and Fraser Logistics, their merger is coming up and the AGM and the voting has been done. It has to be done within the month of March and April. They should probably have chosen a better time, So, unfortunately, this is the case on the timing side. But on the fundamental side, if you look at the merger, now, prior to that, I have already criticized some of the REITs merging just to get bigger, right? So in this case, for example, like Fraser Commercial, they have assets in Australia, they have exposure in Singapore, the likes of your China Square, and before that, they sold off 55 Market Street, which they actually made 3 times the amount. And I was actually looking forward to getting extra gracial dividend from there. But unfortunately, with this proposal, together with Fraser Logistics, now Fraser Logistics basically have assets in Australia, which unfortunately doesn't give you the growth potential as I've mentioned in other classes. But you notice that essentially they also have European assets. And in this case, how does this merger actually benefit or bring synergistic benefits? For example, cost reduction, more efficiency was something already investors were questioning, before this crisis. Bear in mind that in a crisis, as what we have taught in class, when the tide goes down, then basically who are naked. Okay, so these are just general comments as to basically telling you, that it is very important to always keep up to date on what the company is doing. The timing may be right, and they are able, for example, to get through with the merger. But if you have a situation like this, where in a crisis, people only go for the top-end REITs, then you have a problem of losing out. Hi, Augustine. Your question is, how should we determine when the market has bottomed? What kind of indicators should we see to gauge that the market has bottomed? Now, today's session is on the psychographics needed. And it's more apt because, number one, okay, maybe I'll just give you a certain perspective. Now, other than my earlier article, I just want to show you another article, or rather when they interviewed me, how I navigated through the global financial crisis. This was a big write-up on Sunday Times, which says, fortune favors the bold. Okay, you can see I'm just behind. I certainly hope I still look the same. This was like 10 years ago. Okay, but essentially, there are a few things that I would like to share that makes this no different from other crises. And that is the technical indicators were busted. All the indicators that you have learned, be it RSI, MACD, Bollinger's, stochastic, okay, they are all indicating buys, okay? But these indicators do not capture the sentiment, okay? Now, same, do you look at fundamentals? Yes, to a certain extent, in determining which are the better REITs to buy, because all have practically come down that much, okay? So what do I look for? I look for the fact that when I do my buy, you know, remember to be brave only when you have, number one, capital. Now, in the first place, you shouldn't be shaking because the first wave of sell, as you have seen, as well as second wave of sell in this round is caused by fund redemptions, right? So you have attended our classes before, and we have told you that, you know, some of the REITs funds that came up at inception and some of the income-oriented funds that came up and then went on to invest in REITs, those were the danger points. Okay, once they actually are forced for redemption, then you have a big problem. Similarly, some of the high net worth individuals, as well as many individuals, went into high gearing just to bet on REITs as well as the market. Now, if you have margin positions, we are still not been filtered out. And if the positions drop 10% every other day, it's a matter of time before the margin call, right? As we have mentioned earlier, right now people fear the known unknown. That is the impact of margin call on the market. How big, how bad, how long. Now, those are the kind of things, but I do look at volume is one thing. For example, Mapletree Logistics Trust is being hammered from $2 down to $1.30. Anything changed fundamentally? No. Okay, technically, anything changed? Yes, all the technical indicators have been broken. That's why the earlier on, Kenneth asked whether TA is appropriate. I always tell you, it is hardly appropriate. Okay, but what matters therefore is the fact that if you look at the volume of Mapletree Logistics, now never in its history has it been able to notch up volume of 87 million. 87 million, ladies and gentlemen. And if you look at the bid-buy spread, okay, that is the day high and the day low, it's at a historical high. Okay, that means it's actually the widest. Okay, in today's trading, for example, you look at the Sanders REIT. Okay, it was actually up and it came off. It came up again and it came off. That spread is almost a 20 cents. You know, so it's that kind of thing that tells you that the uncertainty is still very much there. Okay, you will see the volume thin down, and this volatility in this trading. Now, the day high and day low for REITs actually is a very good, it's similar to a certain extent like the VIX index. So these are the technical indicators I look for, not in textbooks. Okay, but these are the kind of things I look for that help me to navigate through the past few crises, and also to tell me when to bet big. Now, remember when it is at the bottom, and in times like this, you know, the night is darkest before the sunrise. Okay, so it's the same case when everybody is at a loss of what is actually happening now. Now, this is where you need to be firm, but you must be firm based on your good understanding of the REITs that you have, the market situation, and that's basically what we try to impart in our various REITs classes, which we have been teaching for the last 31 years. Ian asked the big question again, why the massive drop in Capital DC and Mapletree NA Commercial? Ian, this is Capital DC drop is actually 29%. Mapletree NAC drop is 36%. The average drop of all the 43 REITs in Singapore is 35%. Nothing peculiar or no particular reasons to explain why Capital DC dropped and Maple NAC dropped in this way, other than the fact that it is actually a crisis situation. Most of the REITs are being sold down. But bear in mind, as what we have mentioned in the class, those institutionally held REITs are the ones that have been bashed the most. Hi Jillian. Hi Vijay. Time for a beer again. Gerald? Oh, Gerald is asking the same question as Mr. Putek Ling, okay, who sent me an SMS earlier. That is, what do you think about the merger of CCT and Capital Land Trust? Will it be affected by the COVID? Now, essentially the ratios have been fixed. So unless the two companies went back and say that, hey, now it's not been voted yet, see, so if they want to change that terms, which I don't think they will change, but if it actually being changes, you notice that the fortunes of these two companies being tied closely. That's why you notice that the price fall for both REITs are about the same. Joyce asks, iREIT and Manulife are trading at double-digit yield. Rather than looking at the blue chip REITs, are these value REITs worth looking? For iREIT and Manulife REIT as well, you can add in Prime REIT. You can also add in Keppel Oak Pacific. Now, these are REITs that are specifically exposed to assets in the US and particularly exposed to assets in Europe. So I think it's important to note that these REITs, while trading at close to 18%, yes, 18%, especially for Keppel Oak Pacific, you know, if this two areas becomes geographically affected far more than Asia, do expect that this REIT's share price will probably suffer the most. Vijay asked the same question, you know, any reason why ESR dropped a lot? It's no different from the other REITs. Sean asks, is there a possibility that a REIT can be delisted or go kaput? Kaput means bankrupt, right? The thing is that when share price dropped that much, the loan covenants for some of the assets that is being drafted or by the banks essentially would stipulate the loan covenants, loan agreement. If none of these loan covenants actually being breached, then of course nothing to be too worried about. But you have to understand that loan covenants for REITs are written based on debt to their asset value, not so much about the equity value. Of course, falling prices and crises like what we have seen so far are always fertile ground for bankers to maybe change their mind, okay, or become nervy, or maybe to ask greater assets backing or bridging cash. You know, so all this are what we call the known unknown. What time is it? Okay, it's coming to 8:30. So, ladies and gentlemen, maybe I'll just take last two questions. Take one asks a good question. That's for someone who is already fully invested. Would you recommend selling now? Of course, the answer is no. Wait for a better entry later. Well, you can sell now only if you know when is a better entry later. Okay, it's going to drop another 10 or 20% or 30%. But in many of our classes, we have shared that essentially, when it comes to REIT investment, a total portfolio approach is the most important thing. Okay, bear in mind that REITs essentially, while they actually invest in real estate, the way they behave can be bond-like in terms of the dividend, but in terms of the way the share price move. You know, in the last crisis, like the global financial crisis, they have shown to have exhibited equity price behavior. So for example, as I've mentioned earlier, the FTSE REIT index actually fell 70.02% in the last global financial crisis. It actually was worse than the STI performance, which was actually down 62%. So bear that in mind. Last question is from, sorry, Mr. Yong, you did ask, but maybe I'll give the last question to Wee Hoon. Okay, so since it's Wee Hoon's only question, should we keep a lot of cash to prepare for one, large rights issue during the crisis, and two, a margin call if we leverage? Now, at this time, if we are still on margin on any stocks, I think it'll be difficult to sleep every night, right? Or at least to sleep soundly, okay? Beer or no beer, right? Okay, so I think that answers your question. Should you need to keep a lot of cash? Now, of course, at this time during a crisis, if you still have a lot of cash, it's probably the best ideal position. For me, as I've shared in my classes, one of the reasons of investing in REITs is that every 3 months you get your dividend. So for my case, I've expanded the dividend that I've got on the 28th of February. I still have some coming in 30th of March. The big ones are coming on 28th of May. So even if the crisis actually stretch out, I will not be on leverage or margin, you see. So in this case, you know, if you plan properly with respect to your cash call, your cash flow, such that you will not be subject to the mercy of a bank, then it's a very good strategy. And this is a kind of strategy, you know, in total that we teach in our classes. Yeah. So I think we have more or less hit the time today. So do join us. Unfortunately, I cannot take all questions because, as usual, but thanks for tuning in. If the crisis continue, of course, be sure that we will be at hand to try to guide you through, especially for our GCP global students. We have been doing this for the last 31 years. We also want to thank you that for the last 11 years when we'll be teaching REITs, the proceeds of our classes are donated to charities. So we are therefore actually being an educator as much as we can while trying to give you as much information. The platform that we use, now in this case, Facebook has clearly said we cannot make any recommendation. That's why we actually ask you to come for our classes where we can engage you in a context, in a tone, as well as in the timing. So thank you very much, ladies and gentlemen. Have some beer and stay safe. See you again, maybe next week.